welcome everybody. Welcome to Council-led Housing Forum. This session is on market uncertainty. My name's Visika Sri Chandrasekara and I'm the Council-led Housing Forum manager. So Council-led Housing Forum is hosted by Future of London. If you don't know us, we're a network for the built environment. We focus on practitioners and we do networking, knowledge and leadership. The forum is sponsored by the GLA, BPTW, architects and also planning consultants, and Potter Aper, who are employers agents, and Redloft, who offer development consultancy services. My introduction this morning is super short, if you've been before, because I want us to get straight into our first presentation. We're really delighted to have Katie Warwick and Robert Pert with us from Savills. And I'm going to ask my colleague Safa to move us. Yeah, so let's go straight in to your presentation. So I'm going to hand over to Katie first.
Thanks very much, Visika. So I'm going to give a bit of an overview of the market, the London residential market, in particular the development market, and then hand over to Robert Pert, who's going to talk a bit about council delivery and some of the risks and challenges ahead. So just to launch straight into the first slide, the market is definitely a little, I think probably the word is frenzied at the moment. I don't know if everyone's finding that. Certainly the headlines at the moment are all, record this and, record high of mortgage applications or sales agreed, completed sales. It's slightly more tempered in London than it is the rest of the country, but certainly, that the headlines are very strong. There's lots of different driving forces at the moment, not least that, everyone has been in lockdown, has been constantly reassessing their situation, what they want from a property. Different priorities are emerging, and some of those people are able to realize that not everybody is in the luxurious position of saying, well, I'm living in a flat, I've got kids in a flat, and I would quite like a house, so I'll just buy a house. It doesn't quite work like that, but clearly there are lots of people who are able to realize that and move, given the experience of lockdown and what their changing needs are. We think about how the market, some of the things that we look at when we think about how the market might react going forward is sort of understanding what has happened in the past. And in previous recessions, this recession that we've just had is very, very unusual when we think about the housing market, because when we've been in an economic recession, the housing market has been booming over the second half of last year. And, that is very unusual. We haven't seen that in the past. So when we think about some of the conditions for what might happen next, there's clearly been a lot of government support around the furloughing scheme, and also the assistance around stamp duty, the stamp duty holiday. But we have seen very low growth in the 2 years leading up to the pandemic. So London saw price falls of around 5% in those 2 years before the pandemic, which meant that actually it gave it the capacity to see a bit of a boost when we saw some of those that support coming in from the government. So that is some of the reasoning behind what has been happening in the market. And of course, the economic backdrop to that is that we've got incredibly low interest rates and likely to stay low for the sort of foreseeable future. But I'll give you a little bit of a clue as to when that might be changing in a couple of slides time. But just to explain this chart on the slide here, we're looking at the level of activity in the market. So these are sales agreed, and it's not just Savills sales, this is the whole market. It's using the listings data from 20 CI across all of the major listings, and we can analyze where we think the market was in terms of the sales activity by each of those price bands at different periods in time. So the first period that I'm going to talk about is that first lockdown in pink, with the pink background, and that it was when we experienced the first lockdown last year, and you can see the activity in the market fell away completely. No one had any idea what was going on. We were just about working out how to continue working and looking after the kids. And certainly that first lockdown, at the beginning of that first lockdown, not many people were thinking that might be a good time to move. But as we started to come out of that, and actually from the experience of lockdown, as I mentioned before, it has made people reassess what they want. And again, for some of those, maybe in those upper price bands, they were much more able to to capitalise, or they're more likely or less likely to be adversely affected by the job security and all of those threats from the wider economy. They were more able, with more job security, with better access to capital, access to potentially housing equity or a deposit, they were able to move. And we're referring to them as lifestyle drivers, because lots of people were looking for more space, they're looking to move outside of London. And again, I'll touch on that in a little bit more detail in a minute. And as we've moved through into the second half of last year, you saw that resurgence in activity. And then as we move into that yellow period of time this year, we had thought that the stamp duty holiday was going to end at the end of March, and to give yourself enough time to transact in that period to make sure that you could use that benefit. We were starting to see activity sort of fall off towards as we approached the end of December. But of course, then we got the announcement that the stamp duty holiday would be extended, and now we've seen a pickup again in activity, a second wind for the market there. So if you just flick onto the next slide, I can just explain how this is very, very different in the rental market. And I know I'm sort of just touching on the surface of what's going on here, and be happy to delve into the detail in questions. But for the rental market, it has been very different. And I talked about some people have moved out of London. We've seen, there's less need for young sharers to stay in central London. We've definitely seen less demand from overseas students, even from domestic students, because all of the courses have been online. We've seen a definite uptick in people going back and living in the family home, which isn't, for younger people, it isn't necessarily in London. So there are a number of people who are no longer, over the course of the last year, have no longer needed to be in London. However, we don't expect that is a fundamental shift, that these people will not want to come back to London. The other factor, so I've talked about the demand side, and on the supply side, it's also been affected by an increase in stock from the short-term rentals market, so Airbnb. So any landlords who have had properties throughout this time, even the first lockdown, they immediately, the tourism closed down, and they were looking for security for their investment and looking for any returns, and they flipped their rental their Airbnb home onto the rental market, which meant that there was much more stock available, certainly in London. And you can see that map on the right, certainly in central London, where much of this is much of these effects are more concentrated. So there's a big disconnect between supply and demand, and that is most apparent in inner London. So inner London, the average rental falls, according to Rightmove, for Q1, the annual rental falls, it's -12 for inner London, and that for outer London, it's just -1. So that is quite a stark difference there. But hopefully I've sort of mentioned that we do think that this is a short-term effect. We don't expect that this is a fundamental permanent shift in what people want from their property. So just moving on to the next slide, please. I'm going to talk a bit about the housing market drivers, and these are the factors that we take into consideration when we're formulating our view on what prices and rents will do over the course of the next few years. I've mentioned the impact that the furloughing scheme and stamp duty has had on the market, and you saw it also on that graph quite clearly in terms of the timings. Because those have both been extended, we think that actually that has mitigated the short-term risk of price falls later in the year. We had thought that the middle of this year, when you had March as that cut-off date, the middle of this year looked quite weak in terms of high unemployment, cut-off of government support. That looked pretty dire. So the fact that they have extended that and tapered it down towards September is, I think, very positive for the market. And of course, throughout this period, we're also seeing the vaccine rollout and easing of social distancing, and also falling unemployment levels. So I've put there in H2, but we've actually already started to see the unemployment levels looking, heading in the right direction at least. Although it is worth noting that London did suffer worse from that, from unemployment, rather than the rest of the country. Although, we have to acknowledge that some people that will be a permanent need for more space, and some people will have moved out of London. But we do think that actually, as people start to return to the office, it's basically, London starts to look more attractive again. Everything starts to open. It's not just the offices, it's the retail, it's everything. It's the whole cultural offering of London. And I think fundamentally, as we start to, I've talked about the disconnect already between the housing market and the economy, and I think actually we start to see that come to operate together again in the way that we would expect. So as we start to see unemployment falling, and we've already started to see that, you start to see a bit more housing growth coming into the market. And the main factor for London, because here we were of course just talking about London still has the huge affordability challenge. London has seen price growth in 2020. London saw price growth of around 5 or 6%, depending on which index you look at, between 4 and 6%. And incomes have not grown at that rate. So that disconnect between house prices, the average house price, and the average earner, it is widening further, and that's not going to go away anytime soon. The government's tried to address this. Obviously the Help to Buy is coming to an end, and what does the government see as the replacement? I think that it's pretty clear, especially after the Queen's speech, that First Homes is what the government would like to replace that with. And also we've got the mortgage guarantee scheme. Again, these are both national policies, and I'm not sure that they necessarily tick the box for London, because of that, because of the loan to income ratios and the restrictions around that. I think it's going to be tricky to see how they make a significant impact in London. Next slide, please. So I'm just going to talk through our thinking on the forecast. So our view on house price growth. I think over the short term, I've probably explained what's gone on up until 2020 and into 2021. And I think we did these forecasts a couple of months ago. And I think already, we usually do this forecasting exercise once a year. We're already starting to feel that we might have undercooked 2021 a little bit, because UK house price growth is still going strong. London has started to come off a little bit. I don't mean falling there. I just mean the very high level of growth is starting to ease a little bit more. But there is I think I started this presentation by saying it's a bit of a frenzied market at the moment, and that's certainly feeding into the stats there. But thinking further ahead, as we move through into 2022, we do think that for London there's likely to be a bit more of a boost of activity when the markets reopen. Some of that pent-up demand of people who haven't been able to move over the course of this year, as they start to see a bit more security from moving through that period of unemployment peak into next year, before the market from 2023 really starts to become very, very closely aligned with those economic factors. So low interest rates, we get past that peak in unemployment. But the crucial thing here for London is that London, unlike the rest of the country, has a really severe affordability problem. So you can see the five-year forecast there, very different between London and the UK. And the main reason for that is that we expect that interest rates are going to start, the base rate is going to start increasing very, very small amounts incrementally from 2024-25. And London, because of the affordability challenge, is so exposed to those very, very small increases in the interest rates. So we start to see that actually house price growth towards the back end of that is more constrained in London compared to the rest of the country. Next slide, please. And what about the rental market? I've already mentioned it is quite a different story in the rental market. The speed of recovery here, having seen quite significant price falls, and remember I gave you those figures for the big split between inner and outer London, but here we're looking at London on average. You can really, the speed of the recovery will be dictated by the speed you see sharers coming back into the market, and you see stock returning to Airbnb, because I think as soon as tourism now is starting to open back up again, you will see people, the greater opportunity will be to get higher rents for their property on Airbnb. So you start to see that supply demand imbalance move, reverse from what it's seen over the last year. And thereafter, it's much more closely aligned with income growth forecasts. And for those, we use Oxford Economics forecasts. Next slide, please. I'm just going to touch quickly on some of the, this session is all about market uncertainty. So this is probably the key slide. We can, you need to understand the market uncertainty to be able to manage that risk. And new build sales over the last year, private new build sales were roughly flat in 2020 compared to 2019. And that is really surprising, because even though I've talked about the fact that there has been a flurry of activity in the market, the markets outside of London have performed much more strongly. Houses with outside space, with gardens, have performed much more strongly than flats, which would logically lead you to assume, well, who's going to want new build in London then? Because new build in London is 95% flats. However, new build sales have remained flat in 2020, and Help to Buy and Build to Rent have been significant in allowing that to happen. But in terms of the future delivery, that's where the problems start to arise, because starts on site are significantly down from their peak of 2009 of 17. They're 36% down last year, and there were so many challenges facing developers at that point that actually many developers that we know were trying to just focus on their existing committed delivery. Permissions granted and applications also, significantly down. And obviously, I've picked the figures for Outer London here because that's where we really need to see the big step up in activity in terms of that new supply coming through. But if you just click on the next, we've put up here some of the challenges. I won't go through each in detail because maybe we can pick it up in the questions. But land and planning always top of the list when people, HBF survey and others, when people are talking about what are the challenges. Industrial land values are now competing very heavily with residential in some areas. There's the wider economic uncertainty and that perceived reduction in demand for London living, which I've talked to many clients about this, and RPs as well. They're very, some surprisingly quite worried about this, and they think it's a fundamental shift. You'll see from our forecasts that we fully expect that, our rental forecasts in particular, where people can react very quickly, and it's those younger people coming back into London. They've been, they would have been the sharers. They've gone back to live with their families. They then come to rent in London. I think that they're the people that are going to sort of be, first in line really to coming back in for that city living. Build cost, I haven't mentioned Brexit yet, have I? So, clearly there's a lot of issues around build costs, and complicated further by COVID and the fact that, getting labour, materials, it's the cost of them, but it's also the logistics of them to get the right things in the right places with the right workers to deliver it, and the access and the COVID restrictions, it's a nightmare. So it's a logistical challenge, which, people are working through miraculously, but it is a further challenge. The end of Help to Buy, there's a few, I've already talked a bit about first homes, and then there's also the residential property developer tax, which is under consultation at the moment. Probably not too much of an issue for you guys thinking about council-led delivery, but certainly for what's going on in your boroughs, there will be some of the big developers who are affected by that. And then there's also the Gateway 2 levy, which is sort of again under consultation to focus on sort of big tall buildings. Next slide, please. I'm going to go really quickly here so I can give Robert a chance to talk. The crux on this slide is that we're not delivering enough homes. We understand that we need more homes. The target has moved up to 52,000, but actually there is wider acknowledgement that that is a land constrained target, and we're not likely to hit that over the next 5 years according to our forecasts. Next slide, please. The housing delivery test may see in some boroughs, we may see that help to boost delivery. Remarkably, only half of the local authorities passed this with no action required, the London local authorities. So yeah, there may be some boroughs where we see, in theory, we're likely to see increased delivery in those boroughs. Next slide, please. So just to summarise, despite the disruption, London did see really strong house price growth. I put here the nationwide figure of 6.3, but Land Reg is sort of more around 4%. But even so, in a time when we were in an economic recession, pretty incredible, and higher outside of London. New build sales have remained flat, again, pretty incredible given what people, what we know about the lifestyle drivers. And we know that actually housing delivery, it is disrupted. There are many challenges and we're not delivering enough homes. And I'll hand over to Robert now, thanks.
Thanks, Katie. I will keep this brief because I'm just aware of the time pressures, and there's already some questions in the chat that I think we want to answer. So, Safa, could we actually just skip to the next one and then straight to the next one? That's it. That's great. Thank you. So, we're obviously aware from all of our clients of the huge ambition that exists across affordable housing providers in London, and particularly sort of the emergence of local authorities as a significant kind of contributor to supply. And these are this is showing what we think will happen in terms of an uptick in terms of affordable supply. I think it's worth noting, and this plays to the wider housing market, that there continues to be a significant proportion of affordable delivery that comes through Section 106. So and that of course relies on a functioning market and a functioning planning system, and I'll come on to some of the challenges that we might be facing around that. But in terms of the positives, we know that there's huge ambition. Many local authorities, RPs, have got ambitious programs. We're also experiencing huge interest from alternative sources of capital wanting to deploy into affordable housing, and that offers opportunities for existing providers, including local authorities, to actually stretch their financial capacity. So, the outlook is positive in terms of we expect to see affordable completions tick up, but there are lots of things that our local authority and other housing clients are grappling with at the moment that pose challenges to that pipeline. So if we can just go to the next slide, please. So just talking about, and some of these Katie's already touched on, but just talking about some of the things that our clients are experiencing and trying to work through. There is a huge focus at the moment around what are the strategic choices that housing providers have, because in terms of landlord responsibilities, in terms of responding to building safety, landlords with stock that needs significant investment, we've already seen this is starting to bake itself into investment plans, and it is starting to have an impact upon, if you like, new supply versus investment in existing. And that's not to say that we're not seeing any dampening of demand to build new homes, but some of those programs we expect to move out in terms of the length of those programs, because trying to sort of accommodate investment in existing stock as well. We're continuing to see, and we're seeing this sharpen, quite significant viability challenges out there. The new GLA prospectus is out there, and many people will have submitted for that program, and there's clearly that's very helpful in terms of supporting the delivery of social rent, which is great. But Katie mentioned rising construction costs. The press is awash with this at the moment in terms of some headlines around particular materials being in scarcity. So I think we're certainly for the short term, I think we're going to see a pinch, and I'm sure you've got other speakers later on in your program who are probably going to talk in more detail about that aspect of it. We're having really interesting discussions with a lot of our clients around what does the cost of future building standards mean? What does the cost of MMC mean? How do we bake these into programs that are perhaps 5 years long, committing to grant rates when you've got future building standards to grapple with? So there are a lot of viability challenges. Thirdly, there has been a flurry of policy changes and proposed changes, and there's still lots in the system. The changes to the shared ownership model are going to start to bake their way through quite soon. There's obviously, in the Queen's speech, there's significant changes to the planning system proposed. There are concerns about, whilst the Section 106 system isn't perfect, there are concerns about ripping that up and concerns about you know, the lag funding that might come through from infrastructure levy, and how that might have a short to medium term impact on supply. And I think the headline for London in terms of policy is there is a national agenda around home ownership, which doesn't tally always very well with all London boroughs, in the sense that affordability for home ownership is very, as Katie has outlined, is very, very constrained. So you've kind of got a national government policy which is very skewed towards home ownership, with perhaps quite different needs and drivers in London. And then, you know, just talking about aspects of the market, I think Katie mentioned planning permissions. Planning permissions had been going up for some years, and you need quite a lot of planning permissions in the system for that, to actually, you need more planning permissions in the system in order to maintain delivery. And that's kind of leveled off. And in fact, the slide you saw earlier shows permissions actually going down. Now, inevitably, that then bakes itself into delivery. And I think just finally, the other thing which continues to be a theme, particularly I think for our local authority clients, and again, I'm sure you'll be covering this, is capacity, is actually human capacity, sector skills and capacity. And that's not just an issue for local authority development teams. It's actually, you know, trying to tap into the supply chain and the capacity and expertise of others. You know, it's constrained in, you know, there are only so many development partners out there. There are only so many contractors out there and constructors out there. So there is an issue generally. I think a threat to delivery is the investment in skills and developing the capacity to deliver. And on that note, in the interest of time, I shall leave it there. Thank you very much.
Thank you very much, Katie and Robert. We've got a few questions, and Katie, I can see you've been busy. You've already answered our first one about the overseas buyers investment. Obviously, that's been a big feature, hasn't it, of the London market? So surprisingly, it's roughly in line with 2019. The other two questions that we have, and I'm sort of speed talking too, because you unfortunately need to leave us, don't you, both of you, at 10 o'clock, so a couple of minutes to go. Katie, these two questions about people's ability to live out of London and commute in, what do we know?
Yeah. So I'm just sort of typing a response in case I didn't get to speak, but thank you for the question. I mean, that's one of the crucial parts of what we're looking at here. So when I look at that supply demand imbalance, we're currently delivering around 42,000 homes a year. The London plan target is 52,000, but that's land constraints. And then the overall figure for housing need, MHCLG, is up at 94,000. So yeah, I think that you're right. I think that there will be a slight increase in the number of people, or a reduction in the total demand for London. I don't think it's significant enough to a move to make that supply demand imbalance, you know, we're so severely undersupplied that I don't think it's likely to, you know, it's tinkering around the edges. I don't think it's significant. And also, I really believe that when London starts to open again, the appeal of London will, you know, it will come back, and that people will come back to being near that. You know, I think, yes, people will want to be in the office less. They'll be looking for different types of home. I think probably what we'll see is some further growth in outer London compared to inner London. So people will be wanting to be within a reasonable distance of the central areas for those few days they go in, but they might actually start valuing more space and gardens and so on. So be looking for a different sort of property within what they can afford.
And potentially HS2 could make that commuting distance change the shape of it.
Pretty long term, but yeah, and as well as, you know, the levelling up agenda in general, you know, there's a lot of targeted investment at you know, focusing on growth in employment around some of these big regional cities. And yeah, equally, if you can get enough of a hub, then companies are going to start north shoring, and that takes the demand away. But again, it's not happening in any significant quantums at the moment.
Okay, that's great. Thank you so much, Katie and Robert. I'm sorry we haven't got more time with you, and you have very generously said that if people have any further questions, you're very happy to take those. So if people want to, people can either email us or email you directly. We'll share, is that okay? We'll share your contact details for those
Sure.
after today's session. So we've been recording, which means we have a YouTube audience as well, and it's something that everyone will be able to watch again. We'll also be sharing the slides. So I am going to say at this point goodbye to the YouTube audience. Thank you for joining us, and do come along to our live events in future.